Nikita, are you there?
Yes, I am.
Uh, can you please send me a YouTube channel link in host and speaker chat so that I can check?
Sure. Again, YouTube, I don't know. It's showing YouTube is not receiving enough video to maintain smooth streaming. Yes, I have shared. Hello, everyone. I hope I'm audible. All right, let's begin with our today's session. Welcome to our new session of Finpulse, of Yes Finpulse, our webinar series dedicated to exploring the technical aspects and broader discussions in finance. Our mission at Yes Securities is to make finance accessible to everyone, regardless of background or experience. Over the past decade, we've evolved from a transactional broker to a trusted advisor for both retail and institutional clients. Now, let's get down to business. Our topic for today: changes in capital gain taxes, Budget 2024. It is my pleasure to introduce our esteemed speaker for today, Mr. Abhinav Chauhan. Abhinav Chauhan is a senior equity research analyst for Premium Research Services at Yes Securities India Limited. He is qualified chartered accountant and have also cleared 2 levels of CFA. Post CA qualification, he has 9+ years of experience and has 6+ years of experience in Indian capital markets. He specializes in covering sectors including BFSI, cement, capital goods, and retail. Today, Abhinav will share his deep insights based off his extensive research and knowledge on the IT sector. And guess what? If you miss any of our sessions or want to revisit the valuable insights shared, don't worry. We'll be uploading the entire series to YouTube under playlist named Yes Finpulse, so you can catch up at your convenience. Remember, this isn't just a one-way street. We want to hear from you. After Abhinav's presentation, don't hesitate to ask questions and share your doubts in the comment section. Your engagement is what makes the series truly special. We have polls and quizzes coming throughout the webinar, so be alert. Over to you, Abhinav.
Thanks, Nikita. Is my screen visible, Nikita? Thanks. Hello, everyone. So today I am going to talk about what are the significant changes made in the capital gain taxes in the budget 2024. Right. So we'll discuss what the background about the long-term capital gain, who has removed the capital long-term capital gain in which year, in which budget, and then who has reintroduced the long-term capital gain and at what tax rate they introduced it, and so on and so forth. Second thing would be the holding period terms. In the capital gain, there are mainly two things, long term and the short term. On what basis we decide whether it would be in short term or the long term. Next, we would be discussing what would be the changes made in the short term capital gain and the long term capital gain, and even including the holding period as well. Then we will move to that changes in the property tax rates that the FM has made, and there was a major change by removing the indexation part that we'll discuss going forward. Beside this, Finance Minister has also increased the security transaction taxes and have changed some buyback norms. And then last, there would be a summary of the overall presentation where you can get it, understand in a better and an easy way. So moving to the background about the long-term capital gain. So in year 2004, Finance Minister P. Chidambaram has scrapped the long-term capital gain at that time because India was in need to entice the foreign institutional investors so that they can invest in India and reduce or simplify the taxations. So they removed the long-term capital gain and introduced the security transaction tax in place of that. So if we transact on an exchange and we pay security transaction tax, then there would be no need to pay long-term capital gain tax. But there wasn't short-term capital gain tax at that time as well. Then moving towards the Modi era, and in year 2018, our FM, late Arun Jaitley, has introduced the long-term capital gain tax at the rate of 10%. And they also have given an basic exemptions limit of 1 lakh capital gain. So if you have a long-term capital gain of 1 lakh, you won't need to pay any tax on that. But if you are exceeding that, then you need to pay 10% of that. Then coming to the budget 2024, where FM Nirmala Sitharaman has increased the long-term capital gain and the short-term capital gain rates across asset classes. So we will discuss in the following slides. So first we need to understand that on what basis do we decide whether it would be in short term or it would be in long term. So listed stocks, equity mutual funds, real estate and infrastructure investment trust, if we hold for more than 12 months, then it would be classified as a long term. But if we are holding for less than 12 months, then it would be classified as a short term. Rest all other classes, if we are holding for more than 24 months, then it would be classified as long term. Otherwise, it would be short term. So in case of bonds, debenture, golds, properties, earlier the long-term capital, long-term means if we are holding an asset for more than 36 months. So in this current budget, the FM has reduced and simplified it and have made 24 months across the asset classes. So that was a basic understanding about the short term and the long term holding period. Now coming to the rates, right? So in this budget, FM has increased 33% increase in the short term capital gain. So which means that earlier the short term capital gain used to was around 15%, which they increased it to 20%. That's a 5% increase. So overall on percentage term, if you will check, so it was a 33% increase. So by looking at an example, that assuming if your short-term capital gain is around 10,000 rupees, so as per the existing tax norm, it would have been 1,560 rupees tax. But the FM has proposed a 5% increase in the overall tax, 33% an increase. So at STCG 20%, if you calculate it, it would come to around 2,080 rupees. So that's a 520 rupee increase, which comes to around 33% increase in an overall capital gain amount. So you can look at for 20,000, 50,000, 1 lakh, 5 lakh, and the 10 lakh short-term capital gains, and what would be the existing and the proposed tax, right? So now coming to the other assets like debt mutual fund and equity FOF, gold, silver, ETF, overseas funds, and the gold funds, real estate, physical real estate, bonds in the unlisted part, physical gold. So all under all these asset classes, the short-term capital gain would as per the slab rate. So beside short listed stocks, equity mutual fund, REITs and InvITs, the capital gain will be 20%. Rest all other asset classes, it will be levied as per your slab rate. Now moving to the long-term capital gain, right? So in this budget, what FM has done, they have simplified the long-term capital gain tax rate across the asset classes. Wherever it was 20% or so, or the 10% without indexation, they have removed all these things and have placed a flat 12.5% long-term capital gain tax rate with no indexation benefit. Beside this, they have also increased the exemption limit from last 1 lakh rupee to 1,25,000 per year for stock and the equity MF. So in this slide, we can check if our long-term capital gain would have been 1 lakh. So So as per the existing tax structure and the proposed tax structure, the capital gain would be zero. Capital gain tax would be zero, right? But if our long-term capital gain tax, long-term capital gain increased to 1,25,000, so as per the existing tax structure, it would have been 2,600. So that is 10% tax rate plus the adjusted for cess amount, it would come to 2,600. But now the limit has been increased to 1,25,000. So as per the new tax structure, there wouldn't be any long-term capital gain tax on 1,25,000 gain. But as we move forward up to till 2,25,000, over there, the tax would be paid same as per the existing as well as the proposed tax structure. That would be 13,000. But if our capital gain is more than 2,25,000, then in the new tax structure there would be a pain for the investor because they would be paying higher taxes on that capital gain. So you can mark as an 2,25,000 capital gain as an break even. So if you gain less than 2,25,000 capital gain in an year, so it would be benefit under the new tax norms. But if our capital gain is more than 2,25,000, then it would be, then our tax outflow would be more than the last year. Now coming to the next slide, that the capital gain tax on the properties. So what FM has changed in this budget, that they have removed that indexation benefit which was earlier given to the SSEs. So basically there were the two ways to calculate the long-term capital gain. So one was that if you calculate or pay 10% flat tax rate, then there won't be any indexation benefit given to you. But if you pay 20% tax on your capital gain, then the indexation benefit would be given to you. So we can explain the indexation benefit in the given example. But what happened in this budget, the FM has increased the 10% limit to the 12.5%, and the 20% tax rate with indexation benefit was completely removed. So it directly hurt the real estate investors who would be investing in the real estate and paying tax at the rate of 20% without indexation, with indexation. Right. So just 2 days back, FM has tweaked the clause and have mentioned that if any asset purchased on or before 23 July 2024, so the taxpayer will get an option. Either they can pay 12.5% tax without indexation under the new scheme, or there would be a benefit of indexation available to those SSEs who have bought the assets before 23 July 2024. But going forward, if any SSE have bought the assets after the budget date 23 July 2024, in that case, the SSE won't get the benefit of the indexation and they have to pay flat 12.5% tax rate on the capital gain that would be arising when, as and when they transfer the asset or sell the asset. So in the given example below, if an asset would have been purchased in 2003 and sold in 2024, so I have shown an example where the purchase cost was 25 lakh and the inflation adjusted value, that is the indexation benefit, if the SSE would have got it, so the cost price would be calculated as 86,42,857 rupees, and in place of against the selling price would be 1 crore 50 lakhs. So the capital gain arising would be 63 lakh 57,143, and tax rate applicable would be 20%. So the actual tax liability that will arise would be 12,71,000 as per the old rule. But as per the new rule, if there won't be any inflation adjusted benefit would be there, so directly the 12.5% tax rate would be applicable on the capital gain. So in this case, the capital gain is 1 crore 25 lakhs and 12 at 12.5% tax rate, the actual tax liability will come to 15 lakh 62,500. So in this case, it would be better for SSE to adopt to the new rule. No, to the old rule, because in the new rule, the actual tax liability is higher than the old rule, right? But in the other example, if the purchase cost would have been around 75 lakh and the inflation adjusted value would come to 97 lakh 23,214, then the capital gain would be coming to around 52 lakh 76,000, and applying a tax rate of 20%, the actual tax liability would come to 10 lakh. But as per the new rule, it would have come to 9 lakh 37,500. So it would be benefit for the assessee to adopt to the new rule. So you have to calculate it and you have to index it, the inflated value of your property, and then you have to calculate the capital gain tax and the whichever the is lower you need to pay. But going forward, if you acquire after the 23rd July 2024, so the indexation benefit won't be there and you have to pay 12.5% tax on the capital gain. Now coming, there were two other changes made in the uh, budget regarding the equity market. One was that there was an increase in security transaction tax in the future and the option side. So what FM has done, they have doubled the security transaction tax on the futures, that they increased to 0.02% from 0.01% earlier. And in options, they have increased to 0.1% from 0.06% earlier. Besides that, they have also taxed the buyback. Uh, so now the buyback will be taxed in the hand of the recipient. So earlier it was used to be paid by the company. Right. Now what finance minister has done, they have bought buyback as par with the dividend. Now the buyback gain would be taxed as per the slab rate of the assessee. So to the small shareholders, it won't be useful or the beneficial for the small shareholders to participate in the buyback, because they would be taxed at the slab rate, so which could come to around even 30% for HNIs and the ultra HNIs. Whereas if we sell in the market, whether you get levied long term or the short term capital gain, tax rate would be lower. So it's better to participate, not to participate in the buybacks. Now the summary of the long-term capital gain and the short-term capital gain that I have provided in a table below. What I would suggest, either you can take a snapshot of this slide. So thanks. That was all on the changes in the capital gain tax rate, including the removal of the indexation and increasing the tax rate either on the long side or the short term capital gain side. I would happy to answer any of your questions.
Thank you, Abhinav, for such interesting insights on the changes in capital gain taxes. Do we have any questions for Abhinav today? Any questions? Right. Okay, so Mr. Tarun Behel asks, with the recent amendment issued yesterday by government, I believe indexation is back. So would you like to share your comments on this?
So there was an unrest on the real estate investor side. They have presented to the finance minister that the indexation benefit should not be removed as such. So they should given be a timeline from where they can get or they use the benefit of the indexation. So what happened? FM has tweaked the clause and have changed the date so that any asset acquired before 23rd July 2024, all the SSEs will get the benefit of the indexation whenever they transfer the asset. But any asset acquired after 23rd July 2024, so the SSE won't be getting any benefit of the indexation. So going forward, if any SSE buy or the investor buy an asset, so then the indexation benefit will not be given to that particular investor. So that's a change that the FM has made by looking at the real estate or the real estate investors community.
Thank you for that, Abhinav. I hope that has answered your query, Mr. Tarun. Mr. Tarun still asks, what is the impact on the PMS capital gain? Impact on PMS capital gain.
Hello. Okay, I was on mute. Sorry. So there won't be any impact of the change in the tweak in the property tax, but in the long term and the short term capital gain changes that will impact each and every investor in the market. So whosoever is participating in the market, either through any of the route, either individual or through PMS, the short-term capital gain has been increased from 15 to 20%, and long-term has increased from 10 to 12.5%. I hope this answers your query.
All right. Any more questions? All right, so time to wrap up our session today. As we conclude, let's apply this newfound understanding to make informed financial decisions. To all attendees, thank you for joining us. Let's continue this journey together. Stay informed, stay inspired, and stay empowered. Keep an eye out for our next informative webinar. Until then, stay connected with us for more interesting updates. Thank you once again for being part of Yes Finpulse.